Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 31st, 2025, and we're diving into the latest earnings report from Ingersoll Rand, a global leader in mission-critical flow creation and life science and industrial solutions. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ingersoll Rand has just released their third quarter 2025 results, and there's a lot to unpack, from revenue growth to strategic initiatives. Let's get started.
Revenue and profitability overview. Let's start with the top line. Ingersoll Rand reported a revenue of $1,955 million for the third quarter of 2025, marking a 5% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by an 8% increase in orders, reaching $1,942 million. This indicates strong demand across their segments. Additionally, the company reported a net income of $244 million, translating to an adjusted EPS of 86 cents, which beats the analyst's forecast of 82. This performance underscores their operational efficiency and strategic execution.
Segment performance analysis. Ingersoll Rand operates through two main segments: Industrial Technologies and Services, IT&S, and Precision and Science Technologies. How did these segments perform this quarter?
The IT&S segment reported revenues of $1,540 million, a 5% increase, although the adjusted EBITDA margin slightly declined to 29% due to organic volume declines and tariff impacts. On the other hand, the P&ST segment also saw a 5% revenue increase to $415 million, with an improved adjusted EBITDA margin of 30.8%, up 80 basis points, driven by strong demand in precision technologies and life sciences.
Cash flow and liquidity position. Cash flow and liquidity are crucial for any company's growth and stability. How is Ingersoll Rand positioned in this regard?
Ingersoll Rand generated $355 million in operating cash flow and $326 million in free cash flow this quarter. Their liquidity remains robust at $3.8 billion, which includes $1.2 billion in cash and $2.6 billion in undrawn credit facilities. The net debt to adjusted EBITDA ratio stands at 1.8x, reflecting a strong balance sheet that supports their strategic initiatives and shareholder returns.
Strategic initiatives and future outlook. Ingersoll Rand has been active in strategic investments and shareholder returns. Can you elaborate on their recent initiatives and future outlook?
Absolutely. In the third quarter, Ingersoll Rand invested $249 million in mergers and acquisitions, including the acquisition of Daveberry Plastics. They also returned $201 million to shareholders through share repurchases and dividends. Looking ahead, the company has provided an adjusted EPS guidance for 2025 between 3.25 and 3.31 cents, indicating a stable outlook. CEO Vicente Reynal emphasized the resilience of their business model and their positioning for durable, long-term growth.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 82 cents for this quarter. How did Ingersoll Rand's actual performance compare?
Ingersoll Rand exceeded expectations with an adjusted EPS of 86 cents, beating the forecast by 0.04 cents. This positive surprise is a testament to their effective cost management and operational execution. The market has responded favorably, and the analyst sentiment remains positive, reflecting confidence in the company's strategic direction.
Key takeaways. To wrap up, Ingersoll Rand has delivered a strong performance in the third quarter of 2025, with notable revenue growth and an EPS beat. Their strategic investments and robust liquidity position them well for future growth. Thank you for joining us, John, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ingersoll Rand's performance in the comments below.
Thank you for having me. It's been a pleasure discussing Ingersoll Rand's impressive results. Looking forward to seeing how they continue to execute their strategy in the coming quarters.